Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we got to talk about Lightning Emotors. It absolutely erupted yesterday on a big deal with Berkshire Hathaway. So I wanted to give you my thoughts on where I see it going. What does this mean for the stock? And I'll also give you my Lightning Emotors stock price prediction for the end of 2021. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the description of my Patreon account. Come over and join the family. We have got an awesome community. You'll get access to the private Discord where we talk stocks. You'll get links to 5 portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send it out so you guys can follow along. I also send out a lot of like swing trade setups, or anytime I map a chart or I'm looking at crypto or just anything that I think can help us become better investors and take our trading to the next level. So come check it out. I think you'll get a lot of value out of it. Day One Squad, I love you guys so much. Thank you for your support. It means the world to me. But guys, let's get started. We got to talk about Lightning Emotors stock. For those of you guys that are new to the channel, Lightning Emotors has been one of my favorite stocks for a long time. Ever since the IPO, the SPAC merger was announced, I've been advocating and talking about it. And honestly, I feel like I've been like the only YouTuber that's been talking about it, especially more recently when it was getting absolutely annihilated down there at like $5. Guys, I've said this so many times. The most obvious option is not always the best option, especially in these emerging, growing, booming industries like EV. You get some of these hyped up stocks that haven't even produced vehicles that get these crazy valuations everybody's so excited about them. The stock runs, to all-time highs week after week. And then you get companies like Lightning Emotors that literally own 50% of the market share, have vehicles on the road, are valued at a fair price, and nobody cares. But now I think that this deal could put them on the map and get them in front of enough investors to get that, hype behind them that they deserve, and the stock could end up doing very, very well. Guys, mark my words. Document this YouTube video. In 5 years, Lightning Emotors will be the way. I had a couple people comment on my YouTube videos the other day, some of my old Lightning Emotors stock YouTube videos, congratulating me. Don't congratulate me yet. It's still honestly below of when I first started calling it out. Thank me in 2 years when the stock is multiples of where it is today. They're dominating their space. They're the leader in, class 3 to class 6. Then thank me, but I appreciate the love, guys. But guys, in this video, I wanted to talk a little bit about the deal with Berkshire Hathaway, what that means for the Lightning Emotors stock. I also wanted to go over the original investor presentation to just kind of reiterate why we bought this stock in the first place, why I like it so much, why I see so much potential in it. Then I'll also give you my Lightning Emotors stock price prediction for the end of this year and the end of next year. So let's get started, guys. First thing we're going to look at, so this is the deal or the agreement that they just kind of inked, as the article says, with Berkshire Hathaway, a unit within Berkshire Hathaway. A lot of you guys know Berkshire Hathaway, Warren Buffett, Charlie Munger. It's their big company. They own a bunch of other smaller subsidiaries. So as you guys can see here, Lightning Emotors stock gains after inking likely largest electric shuttle contract ever with Berkshire Hathaway. Guys, Warren Buffett and Charlie Munger are very, very smart people. They may not be like the CEO of that, specific subsidiary, but you can bet that they were talking about that deal, right? They probably had to give it the okay, and there's a reason why they chose Lightning Emotors and not, another company. They wanted to stay American, so it makes sense why, maybe they didn't choose another, maybe like BYD. I know Warren Buffett's, a fan of those guys, but I think Lightning Emotors was the obvious option for those guys, within the United States. As you guys can see here, Lightning Emotors gains 43.35% in pre-market. It actually ended up doing about another, 37% during the actual market, ended 80% up on the day. After entering a strategic partnership agreement worth up to $850 million with Forest River, a Berkshire Hathaway company, to deploy up to 7,500 zero-emission shuttle buses. The CEO, Tim Reeser, for Lightning Emotors is incredible. He is one of the most active CEOs I've ever seen. He's constantly on Twitter, giving updates. He'll answer back tweets. He's a very cool dude, from what I can see on Twitter. He said that this has a potential to be the largest contract ever in the electric shuttle bus market, and we believe it will be the catalyst for other large commercial vehicle OEMs and fleets to accelerate their adoption of commercial electric vehicles. Absolutely, guys. Just like I was saying, this could be what they needed to get on a lot of retail investors, radars, because I feel like in this kind of market that we're in right now, we're coming out of a really choppy market. All the SPACs were just, you guys got to realize, we were literally in the craziest SPAC, rise anybody's ever seen, right? Historically, where SPACs were coming out every single day and they were running to all-time highs week after week after week. Everything was going insane. Now, once the SPAC craze just got annihilated and there was that huge correction, huge sell-off, all the buzz kind of came out of SPACs. You don't really hear that much about SPACs anymore. It's all just about the SPACs that kind of came out during that time. This is the same thing with a lot of the other stocks that we invest in, like PaySafe and RSI, and we'll talk about that, a little bit later on. But guys, same type of thing. Now that we're getting out of that huge correction that everybody's got to realize, it's like that was a bad correction for SPACs. They got unjustly beat down, and we're just getting out of that. And so things like this are going to continue to happen, and these companies are so small. Lightning Emotors, they're just getting started. I mean, what's going to happen when they post, earnings report after earnings report with just explosive revenue growth, similar type stuff. So, sorry guys, I get excited. The agreement calls for the company to build fully electric powertrains and provide charging products and services for Forest River over the next 4.5 years. For those of you guys that do not know, Lightning Emotors, they build class 3 to class 6 electric vehicles, vans all the way up to buses, and they are also an electrification company. So they can build and design brand new, electric vehicles, but also they can just electrify current fleets that aren't already electric. Companies that want to, flip their fleet and go electric, they can just bring their current gas powered in and they can swap everything. That's a really great model, guys. They've really got kind of three, areas that I really like, and I really like that electrification because for business owners, any way that they can cut costs, but still, electrify, kind of go green, but also, save on fuel and, cost of service running their vehicles, they're going to do that. But anyways, guys, very cool. This agreement is absolutely huge. Now, I don't know exactly if it's like everything's said and done, signed on the line yet. I haven't heard anything, but I will say that even just this, announcement that they are in, talks is very big for the company. Now, even if it wasn't signed on the line and, 100% go to, I don't see any other really company that they would want to give it to, in my opinion. Maybe there's a couple others out there, but I think Lightning Emotors is the obvious option. Guys, why did it pop so much on word of this deal, right? Because the deal's for $850 million and the company's not even worth that. I mean, the market cap on Lightning Emotors is like half of, it's like 450 million, 425 million. So they got one deal that is potentially bigger, double than the entire company's market cap. So that's a big reason why it went just absolutely insane, because people saw that and they're like, holy cow. Now, with that being said, guys, I want to look back at the original investor presentation because, guys, their pipeline was already over 800 million, and they're consistently growing their pipe. So, it's not just like one thing that what makes me really like this company. It's a whole slew of things. I'm not going to spend a ton of time in this video. I've made other videos where I go much further in depth, like through every detail, that I will link right here above if you want to see those. But guys, the couple of things here. A, they own 50% of the market. Okay, that is a big, ownership of the market. They're one of the, they got mover advantage, first mover advantage. They got vehicles out there on the road where a lot of the other companies in this space do not. As you guys can see here, $67 billion total addressable market. The second thing is the blue chip customer base, guys, like DHL, Amazon, Cox, they've got a lot of companies that they build their vehicles for that will be huge for reorders and consistent pipeline revenue moving forward. The other thing that I really like, guys, is the strategic partnerships. Down here you can see with Ford, Plug Power, there's Isuzu. They source a lot of like the big components in the vehicles, like the chassis and the batteries and all these other components to the vehicle, to keep a low capex so that they run a little bit more asset light. And they can kind of go to different manufacturers to get certain parts. So in shortages, they're not having to worry on, or rely on one certain manufacturer or, partnership there. Really good. I like that. Guys, as you can see here, 2-year head start in production and customer validation, 140 vehicles on the road, 1,500 plus vehicles on order. Just awesome, guys. 480,000 addressable fleet with current customers. So the current customers they already got, they have a potential of 480,000 vehicles in their fleets that they could potentially electrify. Awesome. Next thing, guys, is look at the pipeline growth. So when we originally looked at this stock, clear back in, whenever it was, beginning of the year, they had a pipeline that literally was, they had agreements signed on the line, deals that were in contract that would literally cover their revenue from 2020 to 2021. So they already had that contracted revenue. Their pipeline would take them, if obviously a pipeline is a pipeline, right? Not all of them are signed on the line, but their pipeline would cover them all the way till like 2024. So, they've got a huge pipe. They're consistently growing their pipe, and they're converting that pipe very well. As you guys can see here, from Q2 2020, their pipe was down there around 200 million, ran it all the way up to about 800 million, right around Q4 2020. But in the last couple of months, last 6 months, they've grown that to a little over $1 billion, in pipeline orders. So huge, guys. Nearly 500% growth in pipeline since Q1 2020. As you guys can see here, the size pipeline growth in number of deals, compared to projects. You can see here, they're converting very, very well, guys, is what I can say there. Diversified pipe with over 200, projects. Now, next thing, guys, is this is the big stuff. This is what really kind of made me like the company so much. You guys can see here, look at this, this scalability. Now, one of the big issues with SPACs was the insane projections, right? These insane guidance, companies coming out with no kind of, no regulation, nobody to kind of, restrain them. They could go out and just say whatever they wanted and, project just absolutely insane, revenue guidance and earnings guidance where, this looks insane, but I think it is very doable, especially with, you got to think they just got that $850 million deal. But even without that, right, this is what I was trying to say earlier, guys. Pipeline, 133 million to 800 million contracted PO backlog. That was the word I was looking for, 150 million. So as you can see right here, already received purchase orders to fulfill 100% of, that revenue all the way till the end of 2021. So guys, there's no really guessing if they're going to hit their revenue for the end of 2021. And in 2020, they did 9 million. They're about to do 63 million. And I think they'll actually beat that. If the deal with, Berkshire Hathaway goes through and they're all good, they will definitely beat that. So the other thing, guys, is they've got earnings coming up. And in my opinion, this is the type of company where they just got done getting annihilated in the SPAC beatdown. It's going to take some time for them to come out with some revenue, earnings to show big revenue growth and big, profit, growth, increasing those gross profit margins. So once that happens, though, guys, I think investors will see, they will prove to investors that they are the real deal, and that's when the party gets started. So I think there's a lot of upside from here, even though the stock is up 80% or not quite that much anymore, but 70% in the last couple of 2 days. As you can see here, guys, going from 63 million to 354 million in 2022 to 640 million in 2023. 1.165 billion in 2024 and 2 billion in 2025. Guys, that's insane. 200% compounded annual growth rate from 2020 to 2025. So that's what gets me so excited, guys, is that the stock looks so undervalued from the company perspective. but fundamentals lag, guys. In these choppy market conditions, we don't always get, you know, perfect in sync fundamental with share price. That's okay though. So this has given us a beautiful opportunity to get a stock that I think is just going to be definitely the one that leads the space in the next 3 years for $5 a share. Like, how do you pass that up? So I know, guys, I'm kind of ranting, but that's why I like them, guys. They've got a great business, they've got great products, they've got a great CEO, they've got proof of concept, they've got, a huge pipeline, they're constantly growing their sales growth. The other thing is they've got their software, their modular software. They've got charging, they've got the I can't remember what it's called. It's like Lightning system or something. It makes the fleets like 25% more efficient. So just a lot of great stuff, guys. Again, go do your own research and your own due diligence. That's just what I like. I wanted to kind of give you an update. But let's take a look at the chart, guys, because this is disgusting. Like, this is probably one of the worst looking charts that you will ever see. When we got in, it was back here. This is a daily chart. And then literally ever since, it hit the high of, $17.36 back there at the end of January, it was straight down to the bottom from there. We had that big beat down where it took, some of those SPACs were able to find their bottom in March, kind of maintain those bottoms and just chop around in a range. Lightning Emotors was not that. It, tried to find its bottom in March, found it, tried to confirm it, capitulation, right down to it, right to the bottom of the next range, and then all the way down. This is way past their NAV price of $10 as they were a SPAC, and this was like before the combination even finished, and there was that bottom wasn't there anymore. So, just insane. Pushed all the way down to a low point on May 13th of $5.84, guys. You better believe that I bought it that day. And then it did make a higher low right here, guys. Didn't quite get back down that far, but still it did come back down to $6.29. It might have been $6.13 just the day before it had that big markup. After running up and trying to get up here and break that $10 NAV price, or that, $10 SPAC price, just couldn't quite get there, got rejected twice before selling back off. Now, again, it did make a higher low, but guys, you look at this just massive downtrend within the RSI you had. I mean, this was a downtrend, that was manufactured back on December 1st, and it just recently broke it on that big markup. So that is nice to see, guys. Now we are up there in the bullish control zone at least. Hopefully the momentum can continue and they can stay that way. But the one thing that's kind of embarrassing, guys, is look at the volume. Literally went from doing like 200,000 in volume to 153 million in volume. Obviously that volume's not going to stay. Yesterday or today they did 22 million, but guys, even if they can stay at 2 million, 3 million, now they've got some eyes on them. I've already had people commenting on my YouTube videos like, I've never heard of this company, I'm going to look into it, looks awesome. So hopefully this is what they need to get there. One thing that I thought was kind of cool, guys, is that we literally almost kind of had this big dragon pattern. For those of you guys that do not know, a dragon is just a form of kind of a harmonic pattern. You kind of get the head, then you get the left foot, and then the right foot, and then this is kind of the hump over here. And so this is this is a good sign. It's a bullish pattern. A lot of people will trade the the neckline, and then once it kind of breaks out of the tail, this is kind of the tail. They trade it on the upside. So, who knows if that's actually what's playing out. It's, kind of too early to tell, but that's kind of what it looks like to me. We also did kind of have an M shape, harmonic formation. It wasn't a traditional harmonic down here at the bottom, but we did get that first bottom, then that second bottom, which was a little bit of a higher low on that second bottom. And then, from there, we were starting to actually build in positive momentum. There was some good things, guys. Those were absolutely your highest or lowest risk areas. You couldn't go wrong at these areas. I mean, even if you bought it at $6 and they didn't get that Berkshire Hathaway deal, I think that's a winner all day long, because I don't think that it's going to go any lower, and I can't see it staying down that low, especially after they continue to post really good earnings reports. So, guys, again, I think this is just the beginning. There's a lot of upside still. Don't get me wrong. This is not the time to take a long position, because you have a massive gap back to $6 that most likely will get filled. Now, there's no guarantee, but I could see it, falling back down to test, to fill it before running back up, or at the very least a massive, scam wick down. But at the end of the day, it did hold, or it did break above this, that $10 level, and it did hold there today. I would have thought it would have lost most of that run, today, and it would have came back down at least to these, $8.93 levels, but it isn't. So maybe we see it hold there at 10 and we continue to advance because they do have earnings coming up here, shortly. If you do not own it, I would probably wait, because you do not want to get in right here and have it fall down to $6.13 to fill the gap. If you do already own it, depending on where your cost is at, just keep an eye on it. Just keep an eye, see what's happening. Everything right now, guys, looks awesome. You take away the gap, if that's just where the price action was, it would look awesome because you're getting those higher highs, those higher lows. You just got up above a critical level at that $10 price, and you could, see the stock start to really mark up. Guys, there's not a lot of support and resistance over here, right? So, once the stock starts advancing, you're going to run up through those levels really quickly. So, that's it for that, for Lightning Emotors, guys. My price target on this stock for the end of 2021 is still that $30 mark. I still think they can do that, which is literally double pretty much of where the all-time high is, but I think that they can do it. Now, my price target for the end of, 2 years from now, the end of 2022, is up there more around that $42 to $46, but this could be a $60 stock very easily with that Berkshire Hathaway deal. They post good earnings. They keep killing it. So, guys, one thing I wanted to mention, this is the same reason why I am holding PaySafe, RSI, a lot of the other ones that were SPACs during the same time Lightning Emotors was. Because, guys, you have to realize, again, we had that massive run up, the huge markup in all the SPACs. We had the big correction and sell-off. We are not done yet. We are just getting out of that sell-off time. It's going to take a little bit of, a little bit of catalyst, a little bit of good news, a little bit of market movement to get those stocks back to where they need to be. But it will happen. PaySafe, that company is awesome. They post some good earnings reports. We get out of that, far enough away from that SPAC beatdown, and you will see those stocks start to mark up. These are the worst levels to sell them. Do not sell them at these levels. RSI is even, starting to get back to where it needs to be. It's had some really nice days over the last couple of, weeks. So, thank you so much for watching, guys. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. I'll see you in the next one. I love you all. Come join us at the Patreon. Peace.